Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, welcome to another exciting week in the crypto market. Just when everyone thinks that everyone's gone on vacation and it's off to the summer doldrums, we get a flurry of exciting activity. I know on July 4th, there was, first of all, some movement in some very old legacy Bitcoin wallets that were over 10 years old and had not moved. Still no clear answer on where that was from or who that was from. We also had World Liberty Financial, the Trump-backed crypto project, and now putting a proposal live to turn on trading for their token, which could also potentially be an interesting market play. In addition to that, we saw some smaller Solana ETFs go live. However, these have had very small inflows, and we have seen other Solana ETF products and some ETH staking ETF products go back to the drawing board. But as always, we're here to talk about tokens. And I got to tell you, there's a bit of a theme this week, unintentionally. A lot of perpetual exchanges this week. So first up, we're going to talk about Vertex. This is actually pretty interesting. So Vertex is a decentralized futures exchange. Yesterday, the Vertex and Kraken, another large US-based exchange, and their newly launched layer 2 called Ink, announced that they had inked a deal, no pun intended, for the protocol to absorb the exchange in an acquisition deal. So as part of the deal, Vertex is going to shut down all their deployments of the exchange. They're currently live on not just Arbitrum, which was their kind of home base, but also on Base, Avalanche, Sonic, and Mantle. And in return, Vertex holders will be airdropped 1% of the total ink supply. Eventually, the goal is to wind down the Vertex token as the team and trading stack are absorbed in Kraken. Kraken has stated that this is kind of part of their broader effort to establish a robust on-chain perpetual market. The Vertex token is down about 98% from its all-time high, and the exchange only currently accounts for about 25 basis points of the decentralized futures market share. It is also down 69% for the week. All right, next we're going to talk about GMX. This is actually like totally fresh off the press. It happened super early this morning. GMX, another decentralized perpetual futures protocol exchange, announced that they've been exploited for $42 million. So the situation is still unfolding. Usually, kind of what we currently know is that the exploiter deployed malicious code specifically to drain the V1 version of the GMX protocol that was live on Arbitrum, the layer 2. So GMX is actually primarily in their V2 version right now. So V1 is kind of considered like a legacy version. And as a result, it's not going to be as well maintained as their V2. But as most people kind of believe code is law and you shouldn't take down old code and stuff like that, they leave the contracts for the V1 live for people to continue to use if they still have assets deployed in there. So specifically, the hacker drained assets from what's called their GLP pool, which you can kind of think of as their kind of, I call it like their house. So if you basically want to park idle cash in GMX to kind of earn a yield on whatever, basically take a cut of whatever GMX earns, you can do that way. So doing so, the hacker took a number of assets and they've been able to so far kind of siphon off some of them and are starting to essentially launder that money through various crypto rails. The team did announce that users using the V2, the protocol, are not affected. However, V1 of GMX has actually been forked and used multiple times in other protocols. None of them are quite as big as GMX or even well known, but GMX did provide a fix for this loophole that allowed the exploit to occur. And other protocols can still, they can implement this fix in the future. And hopefully will. But the GMX team has offered a 10% bounty to the hackers if funds are returned and are still working with authorities to recover those assets. The GMX token plunged about 20% this morning on that news. Notably, GMX currently accounts for 2.24% of the decentralized futures market. All right, now we have our third perpetual future exchange that I'm going to talk about this morning or today. So this was a bit of a shorter update, definitely more of a positive one. But Hyperliquid, they are one of the largest decentralized futures exchange, or they are the largest by market share. Yesterday, one of the largest wallet providers, Phantom, you might have used it. It's a little Phantom symbol that can often be seen in your web browser if you have the wallet installed. Phantom has launched perpetual futures trading within its wallet. Now, the way it's doing that is it's actually using Hyperliquid's exchange, using something called builder codes. It's really just a fancy way of saying we have an API that allows us to use the Hyperliquid infrastructure and liquidity to offer perpetual futures markets on our own exchange. So we've seen a few products actually do this before, but the one with the Phantom integration is massive, especially because wallets, especially wallets like MetaMask, Phantom, Rainbow Wallet, those are kind of the first touch points that a lot of people have with using on-chain products. And you have to have this external wallet usually to interact with these on-chain products. So it's really cool to see that they're actually going to be using or basically allowing people to kind of trade these products without having to necessarily be on a centralized exchange. You can do it from the wallet. I'm sure there will be some kind of fee switch that is beneficial to Phantom TBD. But like I said, very cool. If anything, this is just going to increase Hyperliquid's overall volume and revenue. The latter of their, just to give you context, their revenue currently is annualized at about 900 million. So only adding to that. Hyperliquid, though, only up 4.3% for this week. Okay, last up, we're going to talk about Bonk. And I feel like I've talked about it a lot in the last couple of weeks, but I got to say this is definitely one that is important considering today's news. So over the weekend, Let's Bonk.fun, which is the meme coin launchpad created by Bonk, the meme coin project. This is all on Solana. Overtook Pump.fun in market share. So Bonk captured basically 50% of what are called token graduations and that's kind of how the market share is measured. Token graduations is when a meme coin is created and then it ends up having enough liquidity and interest from buyers that it graduates from the meme coin launchpad platform and starts to freely trade on decentralized exchanges. So this is a big kind of metric that a lot of people watch to measure the success of these platforms. So Pump Fund, by the way, still has about 6x the number of active users that Bonk does, about 111,000 versus 17,000. But the rise of Let's Bonk.fun does show that there is potentially some weakness in Pump's platform, which has really been a platform that's dominated the space for well over almost 2 years now, actually. So in addition to this, Pump's token generation event and initial sale are actually expected on July 12th. There was an announcement today. There was a false announcement on Monday from the Gate.io exchange, and there was a full announcement today from the Pump team that they are indeed going to be conducting an initial token offering. So that will be one to watch as well. Bonk, though, it's up 37% in the last week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.